Good afternoon, good afternoon, good afternoon. This is B. Steve here, once again. Today I'm going to talk about, for those who day trade, who was a day trader, you can write off your expenses against your capital gains. And I'm going to take a few minutes to talk about that. Okay, in order for you to write off your expenses as a day trader, you have to follow the meet the few tests here, and I'm going to explain each of them. Here are the three: frequent, regular, and continuously. The activity of trading must be almost a daily occurrence because traders make money from the ups and downs of the market. So it basically means you have to be, trading every day consistently. Next is the substantial. The U.S. Tax Court definition of substantial or extensive is based partly on the taxpayer's time spent reading research reports and consulting with others. So basically, any securities that you buy and sell, you should be an expert of them. So that's basically what the substantial means. Now, the short-term swings, basically, is a trader typically holds assets for a very short period of time, usually just for a few days. So again, you will have to constantly hold trades on a short-term selling constantly throughout the day. Now, what the next one I'm going to talk about basically is how to calculate the profits. All right. Now, to calculate the profits, you're going to take the cost basis, meaning how much you purchased the stocks for, and the proceeds is basically how much you sold it for. So if you look down here, there's a calculation on how to calculate the profit. So you take the basis minus the proceeds, and this 6937 is the profit that you have to report on the form, which is called the 4797. Now, the 4797 is a form that you use if you selling if you dispose your business property. And since you're a day trader and you're in the business of buying and selling, you will have to put this on the IRS form 4797. And what you do, you put it in part 2 where it says ordinary gains and losses. So for example, I just repeat the steps from the previous slide and put it here. So right here, you just put day trader or whatever the name of the security is, the date that you purchased, the date that you have sold it, and then your profit here. Okay, so that's how you report it on the 4797, and eventually you're going to have to put it on the regular 1040. So therefore you show all the income that's stored on the 1040. Now I'm going to, and then once you do that, then you go to the Schedule C, where you claim all your expenses. So I'm going to enlarge this a little bit so I can better show you. Now, up here, of course, you're going to put the required information here. Minimize that some more of the Schedule C. Now, because you're a day trader, you will have to put the business code. And I'm going to enlarge this a little bit so you can see it. And this is the business code that you would use when you do the Schedule C. So the IRS would know that you are doing day trader, so they won't send you that nasty letter that they like to do. And of course, when you come to the income, you'll leave that blank because you already reported income on the 4797 that's ready to go to the 1040. So you'll leave this blank. Now, and these are the expenses that you can probably claim, and I will probably put out a video of these expenses on the Schedule C. But most likely, if you're a day trader, you probably do it at home, and if that's the case, then you can write off your home expenses, such as your rent. A portion of your rent, portion of your utilities, and so forth and so forth. And I did a brief YouTube video of an introduction of how that works, but I'm planning on doing a video of how you calculate calculate the deduction here. But normally this will go right here for the home expenses. Okay, so basically, and I apologize, I should have did calculate the amount that you're going to be taxed on, but I'm going to do it real quick while I'm still have some time left on here. So I'm going to pull out my little calculator here and click on here. Now earlier I showed you that the profit is 69.37. Here, that's the profit from the 47.97 minus the home office expense, which is 56.50, which is listed on the Schedule C, and you take the difference of that, so you should be paying taxes on $1,287. So this is how much you pay tax on. So now, lastly, what I'm going to talk about here. Hold on, let me. Is the go my screen down. Minimize this. Minimize this so y'all can see this here. Okay. Sorry about that. So the last thing I'm going to talk about is the market-to-market election for traders. So basically what that means, let me give you an example here. Now, if you're a regular investor and you buy and sell stocks, if you sell it at a loss, you can only deduct only $3,000 of loss. So let's, for example, if you have a $5,000 loss, you can only allow to take $3,000, and the remaining of it will go into next year's tax return. Now, if you make this election market-to-market election for traders, your losses it doesn't cap. You can take the losses unlimited, so there's no cap on it. And for order for you to take that election, you're going to have to write a statement, the statement on your return and submit it with your return. And this is what you're going to put on a return. The election is made under the 475 of the Internal Revenue Code, the first tax year of which the election is effective. So you put that information here, and then the trade the business for which the election is made for. So you have to include that on a statement and submit it on there with the return. Okay. So I hope this helps when you file your taxes for this year, 2023. Please, comment if you need to be, and when you comment, please be respectful, as I be respectful to others as well. Thank you very much, and you have a good one. Bye bye.